So maybe just thinking about the two different jurisdictions, I suppose if we call the EU a jurisdiction per se, it's not really, but I mean, Luxembourg maybe is the primary location in the EU for fund launches. And then you have offshore, maybe from a European perspective, which is Channel Islands, Jersey and Guernsey are hugely dominant there. And then we have the UK structures that could be launched. What would be the factors that might drive an investment manager to go, okay, I'm going to go this way or the other?
Yeah, no, Peter, happy to elaborate on that. I mean, I think when it comes to onshore Europe versus Channel Island, I mean, the one element that jumps out, no matter where your fund will be domiciled within the EU, whether, I mean, let's face it, it's Luxembourg or Dublin, Ireland as the two really leading jurisdictions in that area, is the regulatory context, because the advantage that we have within the EU is what's called the marketing passport. So that is the ability for the fund manager with a single notification within the jurisdiction of choice to really access all 27 countries when it comes to their investor base. And I think that's what makes that prospect so compelling. Channel Islands not being part of the EU, they don't have that advantage and would have to go down a somewhat more cumbersome route of private placement regimes, which work with some jurisdictions but not with others. So I think that brings us really to the situation or the question: are you aiming to set up a fund to really broadly market and distribute within Europe? I think then onshore is your place of choice, and then we can dig deeper into, okay, what Luxembourg or Dublin, or do you maybe have a smaller restricted number of investors, maybe from the Gulf region, maybe from elsewhere on this planet, and the Guernsey Jersey structures are maybe a little bit more compelling because less regulated, a little bit less costly. I think those are the considerations to be made.
Yeah, absolutely, I would agree. But it is true. There's a lot more to the rest of the world than Europe. It is great having the passport, the single application across Europe. It's very, very useful if your investors are European. The private placement regimes allow Jersey and Guernsey to bring in European investors, but to a smaller degree. But it does leave open the rest of the world. So South African, Australian, US, Middle Eastern, they all see advantages in taking their structures offshore. And it's important to appreciate that when we're talking about offshore, we're not talking about tax avoidance or tax evasion or anything like that. It's a very, very careful tax neutrality so that any investor anywhere in the world can invest without any tax drag on their investments. Nothing is taxed at source. They receive 100% of their gains, and they can then declare their gains locally so that they're properly taxed. And it's an advantage of Jersey and Guernsey that it can do it worldwide with investors.
Yeah, I mean, if you talk about the pros and cons of one jurisdiction versus the other, would you have anything to add?
Well, maybe when we talk about within Europe, that question, Luxembourg versus Dublin. At Ocorian, we're in the private asset space, so we're talking about asset classes, private equity, venture capital, private debt, real estate, infrastructure, maybe fund of funds with those underlyings. And I think in that area, Luxembourg tends to be the jurisdiction of choice. For historical reasons, I think the jurisdiction has been very nimble at implementing particular legal structures like the Luxembourg Limited Partnership, which closely mimics what really global investors are used to from the more Anglo-Saxon style LP structures, and that has had a huge success. I think Ireland has been lagging slightly behind. On the other hand, very successful on the slightly more liquid strategies. I mean, anybody who looks into the eyes and numbers of ETFs are likely going to find an IE for Ireland, and I mean that's very clearly recognized in the market. So you could say, okay, they've kind of naturally found their niches. Is that going to stay that way? Well, who knows? I think it's always good to have a bit of competition and to make sure jurisdictions stay innovative and keep working at it, making it better and improving things for the financial community. I mean, in all compliance within the set of rules that we tend to like in Europe, but nonetheless, I think. The toolboxes that we have in our jurisdictions will continue to evolve.
Yeah, I think it's key for me that you have the right structures available within those jurisdictions. And you mentioned Ireland. It's another place where we can offer the full range of services that a new manager would require. We've got that clearly in Luxembourg, key jurisdiction, Jersey and Guernsey. So I think probably common theme there would be that we're really there to assist manager with taking certain steps within that fund launch structure. And I think they would sometimes come to their legal advisors and look for advice, but sometimes they come to us as well. Yeah. I mean, there's a key place for us or a key role for us to play in an onboarding of a fund, I guess, in terms of steering clients away from pitfall.
Absolutely, it's giving our experience. And one of the confusing things for new fund managers is the fact that each jurisdiction, when you ask for their pros and cons, they'll have very few cons typically, and the pros are all very similar. We are all regulated, we are all able to deal with it, we all have multiple structures that are established, we all have an established framework that you can use. All the pros are very, very similar. It really does come down to the tiniest details over what you're trying to do that lead to the choice, I believe.